welcome to RANsquawk's e-morning briefing for Monday the 21st September 2009. Just heading through now, 9 o'clock in London, so recap firstly of the overnight news and then into where we stand at the moment. Starting off with the Asian session, obviously the Japanese markets shut today and a lot of the other Indian such markets shut for Ramadan as well. So the national holiday in Japan as well, to note, does continue in both tomorrow and Wednesday. They're not back in the market until Thursday, so volumes in the Asian session are a lot lower at the moment. In particular though, the Shanghai Composite did trade. That closed up just shy of 0.2% in the green. Comments out of Reuters reported that China's economy will be able to achieve a growth target of 8% this year, but the country should not rest on its laurels as problems remain, according to the Statistics Bureau's top economist. Elsewhere, China's central bank saying on Saturday they had done a good job promoting economic growth and would keep implementing growth policies as set by the country's top leadership at a meeting this week. Obviously, much of the focus later on in the week will be into the G20 meeting in Pittsburgh. According to sources, G20 leaders will not discuss the role of the dollar at that meeting. They say they will not discuss interest rates and monetary policy. They'll discuss bonuses but no caps on remuneration, and say stimulus must remain and start preparing for exit strategies. So pretty much in line with what we were expecting, given most of the EU commentary and central bank commentary that we saw last week. Elsewhere from the FT, the world should not assume that the financial sector has rebounded for good despite stock market rallies. That was according to the head of Bank of International Settlements, the BIS. They're taking it out of Europe. A few ECB officials, starting off with Axel Weber of Germany, said that the period of economic freefall is over, though the path to recovery is somewhat bumpy. Weber says German jobless increasing in 2010 and 2011, but does not see it breaching the 5 million level. ECB's Mersch also said that the global financial and economic crisis is far from over and risks remain despite positive signals. He was cautioned of the dangers of maintaining a low interest rate policy, saying rates should return to a more normal structure once the economy becomes back on track again. In terms of foreign exchange, we have seen some pretty notable moves so far. In particular, the pound has dropped over 100 pips in early trade. The pound's long-run sustainable exchange rate may have fallen due to an increased focus on Britain's economic imbalances in the wake of the credit crisis, was what the Bank of England reported in their quarterly bulletin, which was released overnight, which has contributed to some of that sterling weakness across the board this morning. Elsewhere as well has been a story of dollar strength. We did see the dollar index move up over 0.5%, where it has pared back slightly, but still trading stronger, which has been reflected in all of the major pairs, with euro dollar and cable still around their lows, and dollar Swiss up at its highs, as well as dollar yen. In particular, belief now that the US will this week propose a withdrawal of stimulus measures. We will see that FOMC rate decision on Wednesday, where Bernanke, having said last week that the recession has probably ended, has that the Fed now will signal an unwinding of quantitative easing is somewhat intensifying in terms of market expectation. Again, that dollar index as well feeding through into the commodities, where of course they have come under a bit of pressure. WTI crude futures still trading around their session lows, just around that $71 handle at the moment, which has seen in equities on a sector basis, basic materials yet again the underperforming sector. Taking a look in a couple of UK related headlines from that Bank of England bulletin, they also said the financial crisis has helped to reduce or rebalance the global economy, but more structural changes are needed to prevent imbalances from returning once the recovery is underway. Elsewhere, Wright moved house prices for September, where homes in England and Wales are on average 1.5% lower now than they were this month than a year ago, with the available stock at its lowest for 18 months. And insolvencies fall to the lowest level for this year, according to the Telegraph newspaper, who cited Experian. Also, attention this week will focus on the BOE September minutes, where whether the governor's hint about cutting rates on some commercial bank reserves held by the banks to perhaps a negative rate meant that he may have discussed this with the MPC. That prospect of that did knock the pound last week, but David Smith, the closely followed economist, writes in the Times that by his sense it may have been a shot across the bows at the banks to stop them hoarding reserves rather than a policy that is ready to be rolled out. But we will see. Again, the minutes from the BOE, they're due on Wednesday. So a quick look in terms of some equity specific news. As already mentioned, we are trading slightly negative with basic materials, the underperforming sector. As well, for K&S in the DAX, they're seen down just over 3%. Their peer in Canada, Potash, issued a profit warning on the back of lower sales volumes. That's predominantly weighed on the stock there, and also similar companies, as well as Equinet have downgraded the stock as well. For some of the UK banks, RBS said to consider a £3 to £4 billion share sale to reduce its stake. It would enhance the UK government for joining its toxic asset insurance programme. They're seen marginally lower. And Barclays, the company's scheme to spin off toxic assets into a separate company, dubbed accounting sleight of hand by one politician, could boost its profits by more than £1 billion this year. Also for Tullow Oil, a decent mover last week, E&I have rejected making a bid for the company, according to the Journal, putting to bed some of the speculation that we saw last week. Overall, though, in terms of the calendar for today, it is extremely light, so volumes, given as well the Asian holidays, are expected to be on the thin side. We'll just be looking out for the US leading indicator report. That'll be at 3 o'clock London, so 9 in Chicago. Speaker-wise, Bank of England sentence just after 11, ECB's Novotny at 5:30. Then we'll have reverse auctions on both the BOE and the Fed later on this afternoon.